Hey everyone, my name is Rose Brown, also known as the Accountant Therapist, and this video here is part 4 of my 4-part series where I've been breaking down why you owed taxes. Over the last 3 videos, I covered quite a few things like the Form W-4, bonuses, tax credits, and etc. So if you've not yet seen it, definitely go ahead and check it out to ensure that those aren't the reasons why you owe taxes. And of course, if they were, go ahead and make the adjustments necessary so you're not in that same frustrating position of having to owe taxes. Today we're talking about self-employment. Now I know everyone's doing it, or a lot of people are doing it, where they may have a part-time gig or they're fully self-employed. They literally call the shots, right? And when I say self-employed, this means you're an independent contractor. You're not working under someone as an employee. Therefore, there are no taxes coming out throughout the year. So you're responsible for all collecting and submitting of tax payments, right? So as a self-employed individual, you're both the employer and the employee. Therefore, you're ultimately responsible for everything. You now have to determine, well, how much taxes should I pay? When should I pay? How do I pay? So all these questions you are now having to answer and decide. And for some people, this is really frustrating. So they kind of push it to the side until it kind of happens. And that's when I say happen, meaning they file their tax return and then they see how much they owe. The goal here is for you not to be in that position. So for a lot of folks who are self-employed, they tend to owe a lot of taxes. You may have been one of those people. So now that you've seen all of this, you've acknowledged that this is why you owed, we then need to move forward and decide how you're going to avoid that moving forward. There's a couple of things you need to do if you've not yet done them. You want to go ahead and make estimated tax payments. Estimated tax payments may be a requirement of yours. If you owed more than $1,000 on your last tax return, you're actually required to make quarterly estimated tax payments. The way you determine how much your quarterly estimated tax payments will be is based on 2 scenarios, really. The first will be based on your prior year tax activities, really your prior year tax liability. Or you can use your current year. When you use your current year, you're going to base it on your net profit. When I say net profit, I mean your total income from the business minus your total business expenses equals your net profit. When you have your net profit, then you'll be able to use your tax bracket to determine how much you'll need to pay in estimated tax payment on a federal, state, and local. So if you're in a local jurisdiction, you will also have that tax payment requirement as well. Now, the quarterly tax payments, yes, it's a requirement, and this helps you to reduce any penalty and interest when you file your tax return because you're paying it ahead of time. There's a couple other things you need to do to make sure that you're not paying as much in taxes. The first you want to do is ensure that you've accounted for all your business expenses or your self-employed activities relating to your self-employed income. Now, I'm not referring to everything that you've incurred. I'm referring to expenses that are directly related to your self-employed income. If it's not, then it doesn't count as a self-employed expense. That would be deductible. When you've accounted for all self-employed expenses associated with self-employed income, now you're putting yourself in a position of being able to maximize your business expenses. Now, when you maximize your business expenses, that means you're reducing your tax liability. So ultimately, you want to make sure that anything that happens directly relating to this self-employed income here, I'm accounting for it because I'm not going to lose out on this expense. The second thing that you want to do is make sure that you invest in tax planning. This is absolutely critical. It's critical to individuals, but whenever you are self-employed or have a business, anything going on, really, you want a tax planner because that individual will help you to plan to legally avoid taxes. When I say legally avoid, meaning creatively using a tax code to work in your favor. And that could mean a lot of different things based on your individual situation. But you don't want to just try to research and kind of do it on your own. You want to make sure that you have a professional on your team to help you work through the different things that you can potentially take advantage of. When you do those 2 things, have a tax planner and account for all your expenses that took place with that self-employed income, you'll be sure to be maximizing your tax deduction and ultimately reducing your tax liability. So that concludes why you may have owed taxes. You may have owed taxes as a self-employed individual because you didn't make estimated tax payments. You didn't account for all your self-employed expenses, nor did you invest in a tax planner. Now, you can be a Lyft driver, Uber, DoorDash, you're still self-employed. And I know a lot of folks who do those activities that make a lot of money. So regardless of what industry or activity you're doing as a self-employed individual, these three things you need to make a priority in your annual activity. As we close out this series, I really do hope that it was very helpful to you to know why you may have owed taxes. And yes, go ahead and make the adjustments necessary. Don't just let another year pass and you're in the same situation. If you have any questions, please drop it in the comment section. Let me know what's going on. Or if there's a topic you'd like me to break down in the form of a series, let me know. Don't forget to like and share. Let somebody know so that you don't have all the details and they continue to owe. That's all for now. I will